Mike Larson here with an urgent update for Thursday, September 9th. This morning, we learned that 451,000 Americans filed for unemployment benefits last week. Plus, we also learned that a whopping 5.47 million Americans have used up their traditional jobless benefits, and they're only receiving aid because of emergency measures passed by Congress. Another 4.48 million are getting traditional assistance. These numbers are a shocking testament to the lousy state of the labor market, and even a slight decline in initial claims filings, likely due in part to the Labor Day holiday, doesn't change a simple fact. The great American jobs machine has broken down. And that's not all, folks. The Federal Reserve reported yesterday that consumer credit shrank yet again in July by 1.8% after a 0.5% drop in June and a 1.2% fall in May. These figures clearly show that people are borrowing and spending less. Now, that so-called deleveraging process is healthy for America in the long term, but in the short term, it's the kiss of death for the U.S. economy because it relies on consumer spending for 2/3 of overall growth. Speaking of the economy, the Fed's latest Beige Book report warned of, quote, widespread signs of a deceleration compared with preceding periods, end quote. The Fed found that manufacturing is slowing, that consumer spending on non-essential purchases is weakening, and that the real estate markets are easing again as well. And those sovereign debt concerns, the ones that were supposedly contained, well, don't look now, but interest rates in Greece, in Portugal, in Spain, and all the other so-called pigs countries are rising again. That means even more potential losses for multinational banks, both here and abroad. Bottom line, despite the bounce in the stock market in the past week or so, the economic news is going from bad to worse. So my advice is straightforward and unequivocal. Lighten up on your stock portfolio, raise cash, and look into investments that go up in value when stocks fall. For more, just stay tuned after this video ends. You'll automatically be taken to my free report with more valuable information on the double-dip recession threat. And if for some reason you aren't directed there immediately, just click on the link below. Best wishes.